How you doing, everyone? My name's Alexa. I'm here in the Tax Hive headquarters in Salt Lake City, Utah. If you look over my shoulder, we have a room filled with business owners, entrepreneurs, people who need to hear our good message. And I'm super, super excited to be here to deliver that. So stay tuned.
Let's get back in. You guys know we're going to talk financial, wealth management strategies, managing your money. We're also going to, when we're done with Epic, we're going to dive into social media, both content creation hacks and just best practices across organic social media placements and everything that we do to kind of optimize that whole interaction with your audience. But I'm really, really grateful that Epic is here. And on a normal month, we have Rob Gill, who's one, original owner, founder of Epic. They do some incredible work with Tax Hive clients. The thing that we love most about Epic is that all of these overlapping, relationships and one person knowing what the other one is doing from a legal standpoint with API law, from a tax strategy standpoint at Tax Hive, and from a money management, wealth management standpoint at a group like Epic. When you have all of those things cohesive and talking to each other, and they all understand the strategy that's contained within all three, you get this very synergistic approach that helps maximize your growth and your dollars. And we've had a really great working relationship with Rob and his team. They fly out here every month from New Jersey to be with our people, and they do an incredible job of taking care of our clients. And so I'm excited for you to learn from them and to do some of the training and introduction from their team. We have Alexa. She is absolutely phenomenal, but to give her a proper introduction, Rob recorded a little video. So let's watch the video. When the video's done, you guys can see Alexa over in the corner over here. She's super friendly and kind and nice. Will you give her just all the energy that you've got? It's day 3. Let's blow the doors off of this place and make sure Alexa feels welcome. Can you help me with that? Holy smokes, come on. Can you help me with that, yes? Okay. So that was a good warm up, right? Because we're gonna do that in like another 30 seconds when Rob's video's done, right? Okay, so here we go. Let's listen to Rob.
What's up, everybody? My name is Rob Gill. I'm the founder and CEO of Epic Financial Strategies, and we've been partners with Tax Hive since August of 2022. And for all the folks that come through this seminar that you're in right now, the goal is, remember, at all times, how do you create the optimal amount of wealth with little or no additional out-of-pocket cost? How do you achieve tax strategies, not just tax write-offs? How do you create the right kind of legal protection when it comes to your estate and your money time freedom? And what I'm really describing is the first step into a fractional family office. Our job at Epic, when we sit down with you good folks, and there's no obligation, is to be able to take whatever you're learning today and yesterday and make sure that we could create a map and a plan on how to create your own financial freedom. I'm not gonna be here today. Unfortunately, I have a personal matter that I must attend to, but my partner, who's gonna come on right now, her name is Alexa Criollo. She's an expert at not only becoming your own bank and all the bite-sized bits of information for you to be able to achieve those goals, but also how does it tie in to achieving tax strategies through whatever you're learning today with Tax Hive. It's a must listen, so shake it all out, grab a pen and piece of paper, allow Alexa to take you through the success process, and remember, there's no obligation to sit down with us. We have a lot of free goodies to give to you because the time commitment you've put in with the good folks at Tax Hive and what Tax Hive has done to get you into those seats, to give you this education, is monumental. So even if you're a little bit tired, wake up a little bit, shake it out, and without any further ado, please join me in introducing Alexa Criollo.
All right, let's wake up a little bit. Thanks for being here. So good to have you.
Pleasure. Can everyone hear me okay? Beautiful. Well, first of all, I want to say thank you so much for being here and to allow us to share with you our experience, our strength, and our hope when it comes to achieving financial freedom and really what that means to us, right? So I'll start. It was March 8th, 2020, and my dad had been traveling for about 2 weeks to Spain, visiting his brother that he hadn't seen in 12 years. Right, so 2 weeks for my family is a very long time. We were excited for him to come back because we're a tight unit. And when he did come back, 7 days later, the whole entire world shut down because of COVID. You guys remember that, right? It's craziness. In New York, we thought it was gonna be like a couple weeks and then we're back to work, but that was not the case. So 7 days later, 10 days after that, after the official shutdown, my dad starts having all of the symptoms. I mean, every single symptom coming from someone who was never sick, who was the strongest man that I ever knew, no underlying health conditions, 57 years old, healthy. And it was so strange that after 8 days, he could not break this fever. It was so frustrating. And his symptoms actually got worse. So April 1st, funny enough, April Fool's Day, what then was my room, he was standing in the doorway, I'll never forget, and he goes, Alexa, I'm feeling like tightness right here. And I thought he was joking for a second. I realized he wasn't, and I say, I have to take you to the hospital right now. So we drive to the hospital. Now the saddest thing about this is that the security guard that didn't let me into the hospital with him when I dropped him off at the ER says to me, oh, if he's had COVID for 72 hours, he's done. Should have brought him earlier. And I looked at him because he blurted this out with no empathy in his heart. And mind you, he's standing in front of a huge container that he proceeded to explain to me was where all of the bodies were that didn't fit in the morgue were. And I said, wow, why would you say that to someone? And I forget, you know, even today, how many people were dying on a daily basis, right? It was insanity. So I drive home, I take what he said, I nod. I'm 24 at the time. I'm feeling lost. I'm feeling in shock. I'm driving to my mother's house, who, by the way, was happily married for 25 years with my dad. And I'm realizing that my dad, who was my best friend, my biggest supporter, the one who would put my socks in the dryer before putting them on me as a kid so I wouldn't feel the cold, like, he was gone by April 19th. And if you told me 20 days before that I would have lost my father to a global pandemic and been living life now without him, I would have said that you're crazy, right? And so it was in that moment, and even to bring it back to today, last week, something unexpected happened that brought me right back there. So my uncle, I promise there's a happy ending here, but my uncle passed away unexpectedly, had a heart attack, and you know, in the whole burial and wake, I'm starting to bring back these memories and think, wow, we never had like a proper burial or a proper service for my father. And within 5 years, I lost the two most impactful male figures that I had in my life, right? Because my uncle, just like my dad, lived with me since I was born. Now, in a first-generation Colombian household, that's very normal. We all live together. 2-3 family homes, we save money to get that next generation through college. And I'm actually a product of that, college educated, so I'm very proud. That was my norm. But I share this story, and it's not a sob story. It's a story of acceptance. It's a story of closure. And this pain that I went through is really what led me here today with all you beautiful folks, right? So I'm super grateful for that. And I want to honor your time because I know the effort it took to be here. And we love Tax Hive. We want to honor the relationship we have with them. And so I share my journey because I made it a point to find the right team to work with, so that anytime that I spoke to someone about proper planning, and that includes wealth planning, tax, insurance, estate, that they had the right information to make good, sound decisions, because that's what it's all about, knowing your options, right? So Tax Hive, thank you so much for having us here. What we love about Tax Hive at Epic is that they stand for, number one, customer experience, and number two, they know the power of having all of your financial professionals on the same page. And it's so important, right? Your insurance, your fiduciary, your attorney, your tax professional, right? You want them to all help you make better decisions. So with that being said, I'm gonna get into what we're gonna get into today. Now, please take a look at the screen. Rob Gill and myself are not in the business of providing investment advice. This is going to be financial education, and we will have time for questions, so please. Now, what today is not, I want to be clear, and I know it's been a long 3 days, so thank you for your time. I can't stress that enough. This is not a sales pitch. We are not going to ask for your credit card information or for anything like that. It's actually a value add training. We are actually going to give you a gift if you stay with me, and I promise it's going to be worth your time, because we want to equip you with the knowledge to maximize your finances as an entrepreneur, as business owners, which every single person in here is. Right, so what do? I get this question all the time. Epic Financial Strategies, what is it that we do? To put it in one sentence, we create tailored financial strategies for entrepreneurs business owners, corporate executives with little to no out-of-pocket costs, meaning we want to maximize your cash flow so you can do more with less, right? Who wants that? Who wants to do more with less money, right? Who doesn't want that, right? And then what does this mean, right? To help you maximize your cash flow so you can get where you want to be with a lot less effort. Now, three topics we're going to cover today. Number one, how the financial industry has failed you. Right? Number two, what it means to become your own bank. Rob Gill, I wish he was here. He kind of mentioned that, and I'll be getting into what that actually means, and how to secure wealth with life insurance. Right? I know life insurance has a bad rep, but I'm going to change your mind hopefully by the end of today. Now, how the financial industry has failed you? Well, shortfall number one, this thing called the 4% rule. It is the guideline for retirement, if you haven't heard of it. So basically, it defines as used in traditional retirement planning to determine how much you can safely withdraw from your retirement savings each year so that you do not run out of money. Because one of the scariest things, biggest fears that I have, that clients come to me with is, I don't want to run out of money. Right? And nowadays we're living longer, we want to make sure we're living comfortably. Right? So if you withdraw 4%, so the rule says, from your retirement portfolio the first year and then adjust the amount according to inflation, you should be able to use that amount of money for 30 years. Now, yes, I'm sure it's worked for some people and I'm sure it hasn't for others, but what we want to highlight is if this is your only approach, you do put yourself at a lot of risk of outliving your assets, which is something we do not want. Number two, shortfall number two is that generalized statement of all debt is bad. Who's heard this before on some level? Like, debt is bad, right? You got to be specific. What kind of debt? Right? Bad debt is, debt you take out at high interest rate, maybe consumer-focused debt like credit card debt that is not producing anything for you, right? Intelligent debt, on the other side, is more strategic. As you business owners, who's taken out a loan to grow their business? Has someone in the room done that? Raise your hands. Awesome. So you need capital to build. When you're in the growth phase, you need capital, and obviously the goal is to generate revenue, right? So this belief can keep you stuck. Number three is high income equals wealth. This was my favorite because it doesn't matter how much you make, really at the end of the day, it's how much you keep. Right? If you make $1 million and spend $2 million, where are we? Negative. We're not doing so well, right? So we want to make sure that we are not subject to what we call lifestyle inflation. I'm sure some of you have experienced it when you make a little bit more money, get a little bit more comfortable spending it, right? More comes in, but more seems to go out, right? If you're not paying attention to it, right? Because where your attention goes, energy flows, right? So we got to make sure that we're paying attention to that. Next, becoming your own bank. Who's heard of this before? Is anyone like, oh, beautiful. So someone has heard that. I know it's trending right now on TikTok and stuff. Anyone here a licensed life insurance agent? No? Beautiful. So you'll kind of understand what this is, right? So this, and I want to kind of frame it because it does utilize the product of life insurance. But life insurance, as most people are familiar, is just about the death benefit. Does that sound about right? Life insurance is like someone gets paid out when you're no longer here. And I get a yeah? No? Yes? Right. Right, but when it comes to becoming your own bank, the vehicle we're using is life insurance. So I'll be clear about that. But it starts with understanding these three principles and understanding you're looking to utilize the living benefits of life insurance because there are many. So the first principle is one of the ways traditional banks make money is through fractional reserve lending, right? So when you deposit money into a bank, say you deposit $10,000, does it stay there? No. They're smart. Banks are in the business of making money, right? They can loan out up to $9,000 of your $10,000 deposit, and they will, and they do, to personal loans, mortgages, car loans, you name it. And they're making a return on the money. Why not utilize that same system in your world? Well, we're going to talk about how you can actually do that, right? Second principle, building a pool of money outside traditional financial institutions like government-owned retirement accounts, your bank, and this gives you more control, right? So I'm not saying that retirement accounts and banks are bad. They're great, we need them. But if it's your only strategy, it can be a little bit dangerous. Again, we're all about diversification, right? Making sure that you have options, because guess what? You can't control what the economy does. You can only control your economy, right? So why not give yourself flexibility to kind of, flow with the ups and downs of just the things that life throws at us. Number 3, you need financing more throughout your lifetime than you need a death benefit. This is probably the most important one, so I'll say it again. You need financing throughout your lifetime much more than you need a death benefit. We finance everything in our lives: cars, houses, businesses, college, right? Everything that we spend money on, we're financing through something. Either we're paying another financial institution something, or lost opportunity costs, because that money you could have used to make money somewhere else. Does that make sense?
Yes.
Awesome. So when you set up these policies the right way, and I'll be clear, we're going to actually go through numerical examples later. Promise it's not boring. It's going to be really fun. It's about creating that bank, right? Whenever you need to finance something, why not choose to finance it through yourself and benefit, just like the bank does, from the borrowing, lending, paying back, that entire process. You're leaving money on the table if you're paying for stuff cash, and if you're financing through other institutions, right? Now, why this is so powerful? Well, you guys are all entrepreneurs in this room. Financial security, tax advantages, and business stability. So this is more of the things that you think of traditional life insurance, right? Where you do want to think ahead in the future, right? If you're building a legacy, if you're trying to pass down, if you have business partners, right? And something, God forbid, happens to either one of you, what happens? How does the business continue? Those are things we don't like to think about, but are important to start considering, right? But tax advantages, we're at Tax Hive, right? Enjoying the tax-free growth that you're experiencing in this pool of money, if you're setting it up the right way, is powerful over the long term, which we'll get into. Now, what is the right kind of life insurance, right? When I talk about this life insurance magical type of policy, right, what we're really talking about is a policy that can be overfunded, that is from a mutually owned life insurance company, which really just means they care about you as the policy owner more than anyone else. So they pay you every single year, and they're dividend paying. So same thing, these companies that are reliable, financially stable, that you can almost expect for them to give you a dividend at the end of the year, because dividends, like anything else, are not guaranteed. However, if you can work with a company that's reputable and credible, you can almost guarantee it, right? Which is where you want to be. Now, into the strategy of how to secure wealth with life insurance. Now, life insurance is a tool if it's used the right way and built the right way. So I'm scared to ask this question, but how many people have had maybe not so great of an experience with a life insurance agent in the past? Can you be honest? Raise your hand. Too many hands, put them down. But yes, unfortunately, I've heard that story way too many times. And so that's why we're kind of here, to make sure that you know that there's more to maybe what they're sharing. So a financial tool with living benefits, you just have to know how to use it. You can do every one of these things, and I would take a picture of this. This is pretty cool. This is what the becoming your own bank strategy is in a nutshell. The life insurance policy you're creating and funding is in the middle, and it complements every single thing that you do, whether it's investing, financing debt, retirement, college planning, because guess what? Every single dollar has to run through your world first, right? Now, it is a financial Swiss Army knife, so there's so many different ways. It's not a cookie cutter approach, which is why it's so beautiful. Right, and we're going to kind of dig into what a traditional policy looks like versus a become your own bank policy looks like. Now, I know these are big numbers. This is just for example purposes. This is actually a real life person, but the range is endless. There's no limit and no minimum. This particular person, when I say traditional design, I mean that every single dollar being funded into this plan is going towards purchasing you a death benefit. That's the sole purpose. Now, over the long term, if you're funding this 20 years, you win. you're always going to have more cash available than the money you put in as premiums, which is what this outlay column is. And if you look at this, even later at 65 to 85, they're taking income of $468,000 income tax free. That's important, right? Because if you can imagine what the taxable number would be to net $400,000 a year, right? So although they're funding it a lot, right? $300,000 a year. If you see the net cash value in the first year, it's not that exciting, right? $75,000. It's about 25%, right? Now, like I said, this isn't bad. This is just not become your own bank. So, and Rob talks about this all the time. He says there's a lot of people on the internet that talk about this strategy, and then they'll sell you something like this, right? This makes the agent a lot of money in full transparency, right? And it's great if you know what to expect, but this is not become your own bank, because even if you wanted to put additional dollars in, say you had an additional savings account, you wanted to invest in a real estate property, run the money through the insurance, this cannot hold that additional money. This is solely premiums in, death benefit out. The cash value does grow, but very slowly, and you do get income on the back end, right? Now, same numbers, I want to show you the same numbers, but now a become your own bank style policy. So if you see the outlay is $300,000, same as before. Now the reason in year one it says $600,000 is because this particular client wanted to overfund, meaning they had $300,000 in their savings account, beautiful problem to have, right? Puts it in here to then use this as their pool of money to invest, to finance debt, to grow their business, things that are going to generate income right back to them, right? So the difference is this one can hold that additional lump sum amount. Does that make sense? I don't want to lose people with these numbers, right? So, and if you see year one, immediately the net cash value of total outlay is about 70%. So that's what you want with a become your own bank policy. You want to be able to access 70, 80, 85% of your money that you're putting in the first year. You do not have to wait till year 5, 6, 7. You would be able to do that in year one, right? Now, not every single person knows how to design these policies, and maybe they don't want to because, like I mentioned, this one pays out a lot bigger than this one, but this is what the client actually wants. Right? And if Rob was here, I know what he would say. We have the beautiful challenge of speaking to a lot of people on a monthly basis, because we get this question all the time. So why do you do this and not this? Right? Why do you take a pay cut? Well, because we see so many people on a monthly basis. Why not give them what they want? And why not help them really start to become their own bank? This is really what that is. And it's still, on the income side, is powerful. $529,000 if they wanted to, not mandatory, take income from age 65 to 85. And I will say that dump in amount, the 300, it's not even an obligation, but just know that you can do it. You could do 100,000, 200,000, anything in between, but you'll know you have that ceiling and a floor. Make sense? I hope so. Okay. Now, for investment purposes, now that, let's say, imagine, close your eyes, imagine this is your plan. This is your plan. You overfunded it year one, you have $423,000 in your cash value available for you to do something with, in this case, invest. You can take that, leverage your cash value, meaning you are going to borrow from yourself and then invest it into a income producing asset, in this case is real estate. Now, people are going to say, why would you do that? Why would you pay interest on the money that you put in the savings and what? That doesn't make sense, right? But let me tell you what's powerful. In this example, say you took out $400,000 to put it down to buy a commercial building. If you've worked with Tax Hive, I'm sure that's a huge tax write-off. All these other things that come along with purchasing real estate. That dividend, year two, that's $75,000, does not get affected when you do that, even if you don't pay yourself back right away. You could put yourself on a payment plan of 5 years, 10 years, no years. Not highly recommended. You want this to kind of, build on itself and be a cycle. However, it has that kind of flexibility. So people like to compare this to a HELOC if you've ever taken a home equity line of credit, but if you have $100,000 in your HELOC and you use $50,000, you have to start paying that back right away. This is not the same thing. This has way more flexibility as far as repayment schedule. And the best thing is those dollars never stop compounding. So you're actually leaving your money, in this case, your $400,000, to accrue interest, dividends, year 2, 3, 4, 5, 6, and beyond, while you're using that to generate and to create another asset outside of that. So it's really giving that dollar 2 jobs at the same time. As you can imagine, over time, that's super powerful because you are keeping more interest in your world that otherwise you would be paying to other financial institutions, even if you bought it cash, right? Because it's lost opportunity. You spent the $400,000, no longer are you benefiting from that $400,000 if it's not in the asset that you just purchased. Right, so that's the point. That's why you get multiple rates of return on every single dollar. And real estate, as a beautiful example, gives you the depreciation, the appreciation of the property, the cash flow, and all these other benefits, right? So now, if we're talking about retirement, same thing. We're using this strategy as the centerpiece to complement other things. It's not which one should I do, this or that, it's an and asset. Because believe it or not, cash value life insurance is an asset, because it builds up cash. But as far as retirement planning, this is probably what gets overlooked the most, and I think is the most important, even though I'm far from retirement, right? But life insurance is a safety net that complements traditional retirement plans. So while you're climbing the mountain, right, producing, saving for retirement, the average rate of return matters. But when you're choosing to utilize that money, when you're 65 or when you're 60 or when you're 70, that's when the actual rate of return actually matters on the distribution years. So if you take a look at this, and you could take a picture of this, this shows the difference of having an investment-only retirement plan versus investment and insurance strategy. So the insurance strategy just complements it. It adds another buffer because guess what? We cannot, and I'll repeat, control what the economy does, right? If we can't control what the interest rates are, what the market is doing, because this, by the way, this whole life insurance world, it's an actuarial asset, so it is a non-correlated asset. It has nothing to do with the real estate market, the stock market. It will grow guaranteed. So it's a good thing to have in your back pocket, not the end-all be-all strategy, but as I mentioned, a complement to just make your world a little bit better and safer, right? Now, the goal is to give yourself options, as I mentioned, because economic times are something we cannot predict, and you want to make every single dollar work for you as much as possible, right? Who can agree that what you guys do is hard? Earn money, like it's not a walk in the park, right? Running your businesses is a full-time job. Yes? Can I get a yes? Yeah. Yes. Okay. Awesome. We want to make sure that that doesn't go to waste. Now, thank you for being with me, talking through numbers and retirement and all these different things that maybe are not super exciting for you guys, super exciting for me, but I want to make sure that this time is worth it, and we're actually going to give you something called the Epic Wealth Accelerator Bundle. Now, this has about $9,000 value. We do, on average, save people about $9,000 doing a proper cash flow analysis. I don't want to take it lightly. I think Devin before was talking about knowing money in, money out. That's step one. It is so important and vital. And then the Epic Wealth Builder and one-on-one tutorial. Now, I had mentioned before what Tax Hive honors the most and knows the power of is having all your financial professionals on the same page. This is actually a tool that in the marketplace is not free. But for you guys, because you're here and because you're part of Tax Hive, we're giving this to you as a value add. I promise, you can have it. We're not expecting anything in return. But it's a software that allows you to aggregate all your data in one place. So you can have your attorney, your tax professional, have shared access to this, right? So you can get a good picture, a bird's eye view of where am I? What is my net worth, right? What does my cash flow, my balance sheet look like? You don't even have to do it, it does it automatically, right? And you don't have to be a tech expert. Like I said, the tutorial's there. We're giving a Epic Path ebook and Surviving Success audio. So Rob Gill, who is usually here, wrote this book called Surviving Success, specifically speaking about not just his journey with money and how he's become successful, but surviving that. And I'm sure you guys maybe understand that on, making your first 6 figures, then over 500, whatever that number is, it's a different person that gets there, right? And you have to survive your own success, right? As we said before, lifestyle inflation is a real thing. If you're not careful, you can go backwards, right? So that book I think is really impactful. Total value is a little over $13,000. I don't say that lightly. And so please get your phones out and scan the code here. I think just because you're here, it is so powerful for you guys to get every single bit of value you came here for, right? If we have a conversation, and it doesn't have to be with me, but that can tweak something and change something positively in your life financially, that is good for us. So please take the little QR code. You can schedule a time directly on a Calendly link and tell the person, they'll know where you're from, but you'll get all those gifts absolutely at no obligation from your part, right? So who has not done it? Take out your phones, scan the code, put your first name, put your last name, best contact number. You could share something with us if you have specific questions. Yeah, sure.
So a long time ago, I lived in New York, and I heard this guy that had I can also just project.
Number 5, Trey.
So about 20 years ago, maybe a little less, I was living in New York City, and had was like a friend of a friend of a friend kind of guy. He was a big hedge fund manager, made millions and millions of dollars, and he had this strategy that he created that I learned about through my friend, that was taking his some of his assets out of his business, a hedge fund, and actually putting those inside of one of these permanent life insurance policies. It was a variable, something like that.
Okay.
But basically created a structure around it, so his business was held inside of the policy, a chunk of it, and used that to kind of fund his own returns. Is that something that you're familiar with? Is it something that you guys have the capability to set up? Not saying that I'm in that position now, but I was curious to learn more about it and how it works.
Of course. I mean, I say scan the code, book an appointment, and because you don't have access to just me. There's a team behind me. I think I kind of understand what you're saying, and I think it just has to make sense for you and your situation, right? So I don't want to answer generally for a specific question, so I would say, did you scan? Yeah, okay. Yes.
I have 5 years already.
So you need 6 and 7. I'm just kidding.
5 QR codes?
No. I have 2 HIGH-YEILDs through another company, and I have 3 through another one. But my question was, is there a way to combine all of them instead of all of them being in different areas, or does your software allow for everything to be sitting right there in real time? Because when I have issues or questions about certain things, I have to go through each different one because I got different people.
Right.
Or the other question is, can you switch them to, if you already had through another one, can you switch that IUL to a different carrier?
So yes, the short answer to that is you can, right? Does it make sense? I don't know yet. Now the software, and that's why I do encourage you to click the QR code, because that software you get to keep, it does link every single policy. So you'll see the cash values, right? If you'd like and even Rob himself or myself can look through kind of what you have set up. Because one thing I've noticed is people will get different financial products throughout their lifetime for different reasons, right? What you want to make sure is at the end of the road, do they all work together for the common goal, right? So that's kind of what the software helps us do. And doesn't hurt to have a conversation, and if it's set up beautifully and perfectly, we'll tell you. And if there's any room for tweaks, then we'll give our suggestions with respect. Okay? Awesome. Did you click the QR code? Awesome. Hi, wife. What's your name? Chandra? Chandra, nice to meet you. Any other questions? You guys don't love life insurance and financial products? Come on.
All right, last call for a question right here in the back. Whit.
Me too. I'm asking for a
This
friend.
friend is 60 years old.
Yep.
Is it-
Young. Young.
Yeah. Is it too late to do something like that?
It's never too late. That's my final answer.
Was there a limit how much you could put in initially?
It depends, right? It will depend just based on like medical rating and how the policy is structured, right? So, you know, your insurability is things that come into play. So when we take people through our process, and like I said, no obligation, but we'll come up with a plan, a strategy options after a few conversations, and then we'll show you what the maximum, minimum, like all those different options are.
19 people book, keep going.
Woo!
Is there a guaranteed percentage return through this policy, the investments that the company makes?
So it varies. So you have the guaranteed rate plus dividend. Over the life of the contract, I would say anywhere from 6 to 8%.
Jacob, right here.
I just made an appointment.
Woo! Yes, let's give it. What's your name?
David.
David! Be like David. Be like David.
What do I need to prepare? All the stuff, HIGH-YEILD, insurances, and whatever else I have. Should I have it prepared, or should I be just ready to go?
So I would say have it, you could have it, that's great. I think the most important thing when we first get on the call is gonna be to get to know you a little bit, right? So if there's anything in that box you wanna share for us to know ahead of time, great. If not, you'll know all the information when we speak.
Anybody else before we give her a just energetic thank you and applause? Did she do a fantastic job?
Aw, thank you.